Ladies and gentlemen, we've come to one of the most anticipated events at the largest virtual edition of the International Property Show and Invest in Dubai Real Estate, the Global Real Estate Leaders Debate. In this session, we will have a global policymakers and experts from the real estate industry talk about what is expected in the coming years and which segments of the real estate markets investors need to keep an eye on. I would like to welcome our session chair for today, the Executive Managing Director of Middle East Capital Markets, Cantor Fitzgerald, Mr. Joseph Morris. Mr. Joseph has over 17 years of commercial real estate investment experience in Europe, the United States, and the Middle East, and currently leads Cantor Fitzgerald, or MENA Real Estate Capital Markets business, focused on investor relations, capital raising, and investment strategies. For our esteemed debaters today, let's all welcome the Global Chairman of Asset Management and Real Estate, KPMG International, Mr. Andrew Weir. Mr. Andrew? Mr. Andrew is the Regional Senior Partner of KPMG in Hong Kong and Vice Chairman of KPMG China. He has over 30 years experience servicing listed companies, public bodies, investment funds, and MNCs in Hong Kong, China, Asia, internationally. He leads the quarterly KPMG Independent Non-Executive Director Forum. Next in line is the Global CEO of Sherwoods International Property, Mr. Isib Rahman. Mr. Isib is the founder and CEO of a 32 years old international real estate company with commercial and residential properties interests across London, Europe, America, and the UAE. He has extensive experience in real estate valuation and leasing and a flair for facilitating land and real estate funding and acquisition for private clients, commercial investors, governments, and private developers. And our last but not the least, we have Mr. Atif Rahman, Director and Partner of Danube Properties. Mr. Atif comes with 18 pioneering years of experience in a successful real estate development action and residential, commercial, and hotel service apartment sectors, and among many significant achievements, successfully construction and delivery of 8 projects during the economic downturn of 2008 is worth noticing. He defines success in real estate through 2 key statements: what you deliver and when you deliver. Please join me in welcoming them. And Mr. Joseph, the floor is yours.
Thank you, Karen. Good afternoon, everyone, and thank you for joining us at this session, which is part of the Invest in Dubai initiative run by the Dubai Land Department. So during today's session, we're going to be looking at the global real estate markets, different demand drivers, which sectors are in favour, which perhaps are facing headwinds, and where investors are focusing their capital, and what themes and trends we're witnessing that can be taken advantage of as we move into 2021. No doubt 2020 has been a testing year for all real estate stakeholders, for investors, lenders, and occupiers. It's clear that there's a great deal of stress in the system in certain sectors. However, there have also been some areas of really strong performance also, which we'll discuss during today's session. So I'm joined today by 3 great panelists, each bringing a different perspective to this, and this will be a great discussion. Karen's already introduced each one of them, but perhaps we can dive therefore straight into some questions. And what I want to do today is perhaps we'll keep it macro and then delve into each participant's expertise as we move along. But maybe Andrew, if we start with you in your role as a chair of KPMG's asset management business. I mean, as we've looked across real estate sectors and geographies in 2020, there's been resilience and there've been headwinds. I mean, where have we seen the most resilience, would you say?
Joseph, great to see you. Thank you very much. Yeah, I'm actually based in Hong Kong, which is very interesting. So I'm sitting in one of the most resilient markets, actually. We sort of have a low intensity recovery, and I'm sitting on the doorstep, Joseph, of a major recovery market, which is mainland China, which I would say is sort of operating at 80% capacity, but has been remarkably resilient in the real estate space. Big picture, you said keep it macro. I think, what am I seeing? I think actually real estate as asset management, real estate as a sector is holding up surprisingly well. This is because globally there's a lot of capital available. there's still broadly a shortage of investment grade supply, particularly out in Asia. I think also government support in many markets is helping some of the tenants. Well, one thing government support is not doing is helping real estate operators and owners, which is a uniform thing across the world. But I think it's been holding up well. And in a strange way, certain sectors have been benefiting. You ask anybody in the world and they talk about logistics, they talk about industrial, e-commerce fulfillment. They're still talking about what used to be called alternative real estate, which was things like aged housing, it was things like student accommodation, particularly in this part of the world, data centers. This sort of what used to be called alternative is now increasingly mainstream. So actually, I think there's been pretty good resilience. Where obviously is the key concern is certain aspects of the retail market, particularly in the States and Europe, and hospitality as an asset class. Those are the two. But just one final point, Joseph. It's very different to last time around in the global crisis. The level of gearing globally and the level of debt and the low interest environment and the pressure on banks not to pull in hasn't yet given rise to a crisis. And the second point I'd raise is the valuers have probably been quite forgiving at the moment in terms of cap rates, required returns. And so you're not seeing a meltdown in valuations at the moment as well. So although there may be an element of head in the sand about that, that actually has helped not have a systemic breakdown and breach.
And Asib, would you, as Andrew says, there's a perhaps a bit more of a we're in it together approach to this, the challenges we're going now compared to the 2008 challenges. Is that what you've seen across the markets you've covered as well? I mean, what sort of stress have you seen, and how are participants in that market dealing with it?
Yeah, I think that there's a lot of areas which Andrew's mentioned. The difference between 2008, post-Lehman's, or particularly any previous economic downturns in the late 80s, even in the UK, where we had very high interest rates, also supply just tapered off. That went to global. But I think certainly alternative real estate is really where the driver's been, particularly anybody that was related to agriculture, food, your basic kind of your everyday needs. And the real estate, I mean, at the moment, I think logistics, distribution centers, data centers, things like that are still very much. But an interesting thing which Andrew's mentioned is the valuations. We've not seen, obviously in Dubai or Middle East, we have seen an impact on the capital values, but certainly in the European markets, we've actually not seen it much, particularly in the UK. And also in Germany, and we're working with some work at the moment. But it's quite interesting now. Everybody's forecasting, will we see an impact in the sort of middle of next year when all the furlough and the allowances, all those things kind of tapered away? But the thing is, because the interest is so low, and most people have gone back and renegotiated the kind of leveraging and gearing and so forth. So banks are only happy to just keep the people float. So valuations are holding up, which is similar. Coming down to your everyday consumer level, and I think general demand is on a low, but of course that is going to come down to lots of different, it's employment, it's job security, general impacted industries like hospitality, travel, tourism, things like that. But certainly I think we are seeing some kind of plateau on that demand at the moment. But on the positive flip, if you think about it, I think that's happened everywhere, where most countries previously were reliant on external consumer demands, have all of a sudden realized what is the exact internal consumer demand. I mean, if you take typical family in UAE, Emirati family would always be out for the 3 months of the summer. It's probably the first time in their lifetime they've actually not traveled. So they've gone and spent money internally within the country. So therefore, all the countries, that's everywhere, in every country in the world, has realized that we have actually got a fairly strong, resilient consumer demand internally if we can keep them happy or make them spend money within the country rather than externally. So I think that's another really where people have to now all of a sudden see a change. And that I've seen it's happened. Well, I mean, Andrew just mentioned about China earlier on. I mean, they're back to 80%. It's because 1 billion people are not moving abroad. There's people within the country. They're moving around. I mean, you look at the aviation sector there, they're operating 90% capacity. So there is a lot of things. So yeah, I think there are a lot of pluses and a lot of where we have to learn and come out of it. Yeah.
And Atif, just bringing you as a developer from that perspective, I mean, how have your company dealt with the last few months, and what resilience have you seen in the market? I mean, we've obviously read about a more positive residential market in many centres globally. How's that been playing out for you here in Dubai? I know there are delineations between the sort of off-plan versus secondary, etc. But it'd be interesting to get your perspective on what the other two.
Yeah, Joseph, I think, we need to understand, we always try to link real estate, and especially on the residential side, with demand. I have a different perspective. Real estate is not driven by demand, it is driven by need. And with the growth in population, with more nuclear families being formed, with more people getting married and establishing their family, I think the demand will always be there because it's a need. What happens when the market is sluggish is that the capability of acquiring the real estate gets impacted. And largely, if you talk about the region, I think it is to do with the lack of financial support that can be leveraged for acquiring a real estate. For us, it's been great. Alhamdulillah, we have been trading well. In fact, I consider in our industry, 3 key indicators as a developer: your sales, revenue, and deliveries. And for us, alhamdulillah, we have had positive growth in all 3 areas of the business. So, I mean, we are not struggling or we are not suffering because of the market slowdown, because I've said it many times, there's a fact, Joseph. It wasn't raining dollars before the COVID happened, and we can't really hold COVID as the reason why the market is in such a situation. Any sensible business, I think we were eyeing a slowdown from 2018. And COVID, in my opinion, had a more positive impact, only not counting the lives that have been lost because of COVID. That obviously is a very sad part. But what happens when the market is slowing down? You need to keep moving, and it's like a sick body, and you need to keep moving, and you're not getting time to recover the body. Same thing happens when the recession happens with the economy. You are not able to stall it. That is what COVID did. It stalled everything, and because of that, it generated cash surplus. There was a rise in liquidity, and what Andrew was mentioning, there's more capital available today at a very, very attractive rate. Now, that is going back in the economy. There is no spend on the holidays, so tourism is impacted, aviation is impacted, hospitality is impacted. Locally, there was a kind of a reverse trend as well, because people started doing staycations over here, and that boosted the hospitality industry over here. But coming back to the real estate industry, I think regardless of the economic situation, it's need-based product, and it will always be there. Can we live without more real estate? The answer is no. And hence, we would always require more real estate. I go back to what Asif said, it is about creating innovation within the product, innovation within the real estate asset that we're offering to people. If we are able to create a more attractive real estate at an attractive price, there is always a market. And again, just concluding on that part, it's not about demand, it's about the inability to acquire these assets, and that is linked not to the market or the consumer. It is, for me, I think it is linked to the banking industry. If they're not participating, then it will continue to have incapability for the consumer to acquire the real estate they want.
Interesting. One of the points you mentioned there was that the acceleration of trends, right? So, and I think we've seen that, and what this pandemic has certainly done is sort of accelerated a lot of technology trends, a lot of movement towards flexible working. I mean, I don't think it's clear that the office isn't dead. There's not one person I speak to today who hasn't got a bit of Zoom fatigue and doesn't crave human interaction.
Yeah.
I mean, I'm interested. I mean, perhaps coming back to Andrew, what's your view on the sort of the move back to the office? We've had some reasonably good news very good news this week in terms of vaccines, etc. People are feeling a bit more positive. I think 2021, hopefully that momentum continues as people move back into the office. I mean, what does this mean in terms of how does the post-pandemic office look? You know, how do people utilise it?
It's very good. You know, Joseph, just going back to Atif's tour de force, I thought that was great, Atif. That point on need is a really important point. And where I'm based out in Hong Kong, the pent-up demand for residential is huge. And I did say at the beginning, the shortage in Asia, for example, is at institutional level, at household level. It's a shortage. It's a shortage of real estate is the issue, which I think many people don't quite realize. Going back to the office, it's interesting. I think the death of the office, to quote Mark Twain, is greatly exaggerated. And even the technology angle, you can argue it two ways. You know, all the major real estate office developers here and others, very interesting. They're holding firm on rentals, but being more generous on holidays and concessions, but holding firm on headline and being very agile and moving into what I call much more win-win situations, trying to link what they're offering, exactly what Atif said about innovation, trying to link to firms' sustainability agendas, trying to link to firms' wellness agendas and what their people want, and the firm's technological demands. And I've been very impressed by the agility of a number of these property players. And you even get to a situation where some of the players are saying that easy assumption that there will be less demand for office space can easily get turned around when you take into account social distancing, well-being, ability networks, all of these things. What is the technological capability on site in office? I've been very impressed. So I think the jury is out, but I think Atif raised a very good point. COVID has acted as a catalyst for three major trends which are already happening. The first one is, if you're in real estate, you're in business, what do you represent? What is your purpose? How do you behave? How are you seen? Your stakeholders are much greater than you realize. You know, this is a really important trend. The second one is this digital technological transformation across all aspects of business, including real estate. What was seen as nice to have and progressive by organizations or tenants or owners is now seen as required, and goes to all aspects. And the third one is this climate change sustainability, where I see, particularly out in Asia, and China is a leader in this, an absolute quantum step forward on this being a non-negotiable part of what tenants are looking for, what has to be offered by landlords, and most importantly, what regulators are now expecting, banks are expecting, and of course, a millennial workforce is expecting. So to cut a long story short, the jury's out on the impact on behaviors, but the easy assumption it will be less demand for office space and rents will come down, I think it's being quite seriously challenged at the moment.
That's interesting, and you know, Atif, going back to you on Andrew's comment on the sort of the effect that the pandemic has had in terms of accelerating trends. As a developer, are you seeing that input your thinking as to how you develop in the future, sustainability, but also perhaps people working from home more, etc.? Are these things that sort of come into your thinking?
I think, Joseph, you know, when you look at such an event like a pandemic, you know, it's guaranteed to leave behind some seasonal trends, and I think it would be extremely, I would call it foolish for any business to follow these seasonal trends, because it is not going to have longevity, you know, in terms of the demand, you know. Yes, we can talk about many things, like, for example, we partnered with Schindler to develop a very unique technology for port management, you know. Now, it just coincided with the pandemic where, you know, these elevators, it's the first time in the entire world that it is going to be delivered in a building where you don't need to touch any buttons. It's touchless. You walk in with your smartphone and the elevator already knows where you need to go, where you live. And if you want, you can change the destination where you want to stop. It delivers more security. So In one of my recent interviews, I mentioned there will be seasonal trends, but we should not get carried away with seasonal trends. I 100% agree with Andrew, what Andrew mentioned. Wait for the social distancing to end. Wait for the vaccines to be launched. Everyone would want to be out because that is how we are. We are social animal. We need to be with people. We need to go out. And look at the malls in Dubai. I mean, it was absolutely crowded. I was with my daughter to the mall last week, and I said, girls, form a queue, because all I see is a sea of people over here. And we are still in a kind of a COVID impacted environment. Yes, situation is phenomenally great in UAE. The government has done some real great stuff for controlling the impacts of COVID. But still, in this situation, the mall was absolutely crowded. Now, does that mean, and if you compare the malls exactly 6 months ago, they were empty. So, I mean, this is how it can transform in 2 quarters, you know. So I don't think we should worry that much about the seasonal trend that it will leave behind, because when I'm out of COVID and I start going to work, would I want to waste the 2 or 3 square meter of my home space for using my office requirements? Absolutely not. When you're talking about affordable housing segment, every inch matters, every square centimeter matters, you know, and that is where I think we need to remain firm in terms of our understanding of the real estate requirement for the consumer. At the same time, I think one of the very important impact of pandemic is something we had forgot: hygiene and health. I think it has shifted our focus back to health and hygiene. And if you carefully look at the impact of COVID, it was as much about social distancing and prevention as it was about immunity. And people who had strong immunity, they were less impacted, they were less influenced by the impact of COVID. So I think it has driven our focus back on health and hygiene, which is very important. I think it had taken a backseat, to be very honest, you know. And I think I've become more health conscious. I shredded off about 10 kilos over the last 6 months' time. I feel more agile. I feel more healthy. And I've been a health conscious human all my life, but I had also slipped into that junk food and typical metropolis lifestyle. And it kind of reminded me that no, if your body is strong, you can fight it, you can stay healthy, you can stay longer, you can live longer, and you can survive pretty well even in pandemic, you know. So I think we should not worry that much about seasonal trends. We should have a long-term horizon outlook for the real estate industry. People will need more space to live, more efficient space to live. How we can deliver more space in less square feet, like where Andrew's position, you know, in Hong Kong. We're talking about, I was trying to study micro apartments, and by the time I had finished my understanding about micro apartments, nano apartments were launched. I was like, I mean, what is happening, you know? So it's like every square feet will continue to become more costly. Remember one thing, Joseph, will we have more land? We can reclaim a little bit of land, but will we have more land? No. And in the same piece of land, we need to accommodate our residential requirement, our commercial requirement, our industrial requirements, and also the nature. You know, so land is the most scarce commodity, you know, and we need to find efficient ways of using this land, delivering more user-friendly, resident-friendly real estate, more happy communities. That is something, another factor where the focus needs to drive. So it doesn't need to be block of buildings, it needs to be community. Wherever there were communities, people were still considerably comfortable during the lockdown. So I think that is, follow the basics. My grandfather taught me construction. He told me, before engineering and technology, remember common sense. I never forget that.
Really interesting. So, you know, Steve, maybe if I bring you in, I mean, both Andrew and Atif sort of said the trajectory is the trajectory. COVID has provided some food for thought and provided some context, but sustainability, wellness, these long-term trends are perhaps more important than the short-term need for, you know, a slightly larger apartment, you know, these kind of short-term elements. I mean, what's your view on the sort of the long-term versus the short-term trends out of this?
I think I fully agree with Atif on a few things he mentioned, but it's just so interesting. Actually, I just finished my research post the Spanish flu in 1950, 1920, around what happened post 1920. And I think if you look at the actual construction boom that took place immediately just post that pandemic, it was actually shocking how vertical living became the norm. And again, it comes back to the space. So I think the pandemic, in many ways, has brought about what I call going back to the starting line again, and everybody getting on that sixth gear and to come out, think out of the box. So I think we all were on this same train, thinking the same way. And listening to Sir Norman Foster last night, and I think the question was that, how did you come up with the idea of the Apple headquarters? And he said, well, and it was all about some of his buildings and quirkiness about nature, the environment. You've got to love it because that is part of it. The office culture is not going to go away. And what he sees now is that, look, it's not going to be your sitting down in the office and desk type. It is going to be how you live, where your space is going to be that you're working at. You've got to think how you keeping people well environmentally protected. So I think that there is definitely, offices are not going away. We are, humans are interactive. I speak to my colleagues in London and if they're desperate to get out and interact with people. So I think post-pandemic, I do see a new wave of boom coming up. You're going to have the biggest consumers. I think that yesterday, the research come out paper I read yesterday, the biggest demand is going to be your 22-year-old and the 30-year-olds. They're going to be your sort of kind of your big consumer. And these are people who've come out of graduates or starting the jobs, but they are going to be your target audience. It's 40% of the population globally. So that's a huge, millennials have now moved on, to becoming the actual users of whatever you're going to produce. So they are going to be environmentally conscious, economically conscious. So there's a lot of thinking out of the box. So I think there's going to be, the offices definitely will continue because that's just the culture. There is a big talk about living, co-living, co-working, that kind of environment. But again, listening to Sir Norman Foster last night, it was very much that if you think of an office building, if you go up, four levels up, he goes, before I would put one level would be just sort of kind of recreational areas and another 4 floors up. But he said, now I won't do that. I'll only go up to 4 floors and that's it. And then you got the green on the ground. So his view was very different in terms of workplaces. So I think people are going to be happy to have offices out of the city, but they still want offices. So it doesn't have to be in a metropolis crowded environment, but they still want offices. So I think that will change. So I do see, I think, a lot of re-leverage, sort of gearing that's going to happen for people to think the mindset is already there. And we've seen that in London, City of London. If you think about it, how people have moved out of, the offices where previously corporates had actually offices out of the city and then had a main center. But I think now they're going to be thinking, well, let's just be out of the city, but have a main nice offices. So yeah, pretty much on that.
Interesting. And look, you mentioned re-gearing, perhaps in a different context, but look, we've got, we're at a stage now where we're still sort of living with the initial repercussions, certain sectors, and perhaps this will lead us into a couple of other sectors, but there's still stress in the system, undoubtedly, and for specifically for perhaps retail, hospitality, which have had a more acute shock than other sectors. How far, Andrew, maybe to you, how far out of the woods are we with those sectors? The worst of the sort of from the occupation perspective seems to be behind us, but is that hangover still chasing us, or how long is it until we see that distress? Is the distress coming?
If you talk about hospitality and retail.
Well, across sectors, right? But those are two that jump to mind.
I think one thing we haven't mentioned is in every major market, government policy, which has always been important, right? Whether it be planning, whether it be tax or whatever. has brought unique characteristics in every market. And, you know, it's very interesting. Out in Hong Kong, the stimulus packages brought in, Joseph, it was envisaged it would just be for 2 months in February and March. When the UK brought in their schemes, look at the challenges the UK has. It was just to hold the ship together for 2 months. These then these schemes carry on and extend and put huge strain on the public finances. So I think a big question mark is, the chairman of a very major global group was saying, the way they look at it is, what was a health crisis became an economic crisis, but that economic crisis hasn't morphed into a financial crisis yet. But when you look at how much disruption to normal capital markets allocation of resources has come from these government programs, where the capital, what it means for capital, where it all ends up, what it means, for example, rates of return and all of this, I think what it means for currencies, what it means for interest rates, these key variables, that is not worked through yet. So we're not out of the woods on that. We're not out of the woods on that. But what I can say is nearly every market I know, the level of distress is significantly less than people were expecting. Stress, yes, but distress, no. And what's so different to 2008, as I think Atif said, Atif said, is there's huge political pressure on financial institutions not to pay dividends, for example, in the UK, and not to call in loans, and as has been said, to re-engineer and extend arrangements. We need it to come to an end. And it's interesting, I was speaking to our chairman in the US the other day. They're quite bullish now about transactions and real estate and asset management in sort of January, February time, and as you move in, whereas a few months, this was before Pfizer's announcement, whereas before it was maybe 6 months down the line or longer. But it needs to come to an end, and then you'll see it working its way through. So I don't think we're out of the woods, but I think we've mitigated a potential catastrophe pretty well. You're back to a fundamental policy question at the end. How are governments going to pay for it? You know, it takes a brave government not just to inflate their way out of it, you know, to pay off the debt. And that is probably the way it's going to go. Issue more bond, issue more government debt, and just inflate your way out. Can we cope with another sort of real cutback in public spending to do it? All of that stuff. If one goes down that direction, the medium-term consequences could be very, very bad. So the key is, what is going to be the global, then regional and national economic policy to finance the public sector cost of doing this, and then how that works through. I think we're going to have low interest rates for a very, very long time. We're going to have a lot of COVID issued bonds, and we're going to have, you know, a long-standing government funding, and that's just going to be the way we will work. Taxes will need to rise in some ways, but I don't think they'll rise in a way which kills economic activity and causes massive slowdown. I think the price is too high for that, Joseph.
Aseeb, Atif, your view? I'd be interested to hear your perspective.
Yeah, I mean, see, as far as the retail and hospitality sector is concerned, I remember reading one of the reports in one of the leading newspapers over here, which said 90% of the F&B outlets will be wiped out post-pandemic. Exactly 6 months later, I found opportunity of investing a couple of them, and the situation is that you have the highest wait time for online orders from all these F&B outlets. The greatest ability of human is the inability to predict. It's like, you know, when my girlfriend or my wife is angry with me, I don't know when that is going to get over, really. I would love to know exactly at what time, what hour it is going to get over, but I would never know. And it gets over. I think it all boils down to what Andrew said. It's about being bold, strong, and the ability of governments to roll out bonds. And that this is where I think governments worldwide, in a situation like pandemic, what can an institution or an individual do? Nothing. I think the onus, the responsibility is entirely on the governments worldwide to come forward and take care of this, because if you're not able to do it, and especially in the tax countries, your tax returns are going to be dramatically low. So you better bring the economy back to where it should be by investing into these bonds, by issuing these bonds, giving liquidity. I mean, what does people need right now? What do people need? Businesses need liquidity. The entire game is about liquidity. So if we're talking about low housing demand or low demand in offices, I mean, let's look at the fact. You go to any individual, the impact of lockdown was extremely traumatic. You had a rise in divorce rates. You had an increase in people's weight. So you had health impact, social impact, and people needed to be out. And I mean, you go to any country and you just announce lockdown relaxed for 12 hours. I bet you we will have a terrible traffic on every street in the city it is announced. Because people want to be out. Why they cannot be out is because of the pandemic, the fear of getting affected from COVID. Now, when it comes to the employment, businesses, economy, the entire challenge is liquidity. The governments come forward, they issue bonds, they bring in liquidity, it recovers the economy faster than ever before. And whatever you're looking at, whether we're looking at the like for example, hospitality sector, for that matter. I mean, I remember during the summer over here, every weekend my wife would go and book a staycation over here, and we were paying more than what I would pay for a private beach villa in Maldives. You can check the rates, what was going in June, July, and August, the peak of summer, which is the slowest period for hospitality over here in the Middle East. And each and every resort was absolutely packed. And how I was establishing is not through any report, because when I would go for my breakfast, leave aside chairs, leave aside tables, not a single chair was available. So it was absolutely packed. And if I'm checking out on a weekday, I could see like a score of people checking in again. So it kind of started moving it. Now, who could predict that? No one could predict that people will be in a lockdown, they still have their budget for holidays, and they would want to go for staycation. Who predicted that you would be done with the lockdown, and when things start moving back, people are fed up of cooking at home, they would start ordering their pizzas and pastas online, and it would start moving the F&B industry. So as far as the hospitality is concerned, travel, yes, travel has as a more reeling impact, because you cannot travel even if you want to, so that is one industry which will see, I think, according to me, the heaviest impact of the pandemic and COVID. But as far as the other industries are concerned, I think the faster governments start bringing in liquidity in the market, I think you will see a quicker improvement in the overall economy.
And talking about travel, I mean, Andrew, you've seen some recent developments in Asia, some bubbles jumping up. I mean, how are investors in the current climate adapting to their investment decision making in where they perhaps can't travel to where they want to put money? How are you seeing them adapt to that, and how do you see that playing out?
Maybe I could just share with people on the call. Actually, I come to Dubai and Abu Dhabi maybe 10 times a year, and it's really killing me not coming there. And I understand that Dubai, Abu Dhabi, Hong Kong have many similarities, hubs, basically, hubs. The Hong Kong story is very interesting. Today was the opening up, as I said, of the Hong Kong-Singapore corridor, basically for businesses. Very interesting. You test before you go, you test when you arrive, you test when you come back, your planes were full. This trying to accept, I'm sure this will happen with Emirates, as with the Emirates as well, how to open up safe travel bubbles between centers of capital and hubs has to be the way forward, Joseph. Very interesting. They brought in the thing which has got to get Hong Kong moving is the opening up of the border with China. I probably sign 100 declarations a week for people to go into China to get concessions from clients in order to do business. And they've now brought in that if you have a certificate, you don't have to do quarantine. But what's interesting is even when there's quarantine, I met the global chairman actually of Standard Chartered in Hong Kong today. He did 14 days in the Mandarin Hotel in quarantine because he still wanted to be in the market. Now, there's many worse things than staying in the Mandarin for 14 days. But the fact that a global businessman comes out and does that because he still wants to get the finger on the pulse, meet the people he's doing deals with, says something. So I think the best way to describe it is deferral of decisions sometimes, as opposed to cancelling of decisions. And the pipeline we have is still very, very strong. The pipeline of capital markets like IPOs, Joseph, is very strong. But we do need, I think everyone's accepted between now and the end of the year and possibly the first quarter of next year is still going to be quite shaky. But as we get towards the end of that first quarter, nearly all the budgets I know in the real estate space, be it investors, operators, deployers of capital, is considerable activity towards the end of that first quarter of next year. And then a reasonable pickup to the end of June, Joseph, and then all hell breaks loose after that. That is the approach. So I'm not seeing it. What is very interesting, like the call we're doing now, I think I've had more connectivity through COVID than I had before. And interesting with investors, deployers of capital, the problem for the deployers of capital in the real estate space is finding enough assets available, to be honest.
Steve, would you agree? I mean, has this accelerated prop tech, for instance? Are we seeing, this sort of really push through things that might have taken 5 years into a year? What's your view on the future of prop tech and how this is made?
Accelerated at an incredible pace on prop tech arena, on the scene, on the tech side. I totally agree with Andrew. Actually, I've had more meetings with people now on online than I would do in person because they're always busy. This way, none of us lose any time, travel time. We can have a half an hour chat, talk to each other, see each other face to face, and we're done with and move forward. Where it comes to the crunch of decision, I totally agree with Andrew. One thing that we have noticed, firstly, there is definitely a lack of assets on the market because a lot of them are underpinned by concessions by the bank, re-gearing, sort of kind of thing. So nobody's really pushed in a corner to sell. So we don't see any of that at all. So when you're going out looking for an asset, you really are struggling to find something that of any substance. So that is definitely it. The ones who are buying of those type of assets, the interest is very much there, but the actual crunch time when they have to now, put the anchor down and say, well, look, hang on, let me go over there, and then that logistic delay comes into it. So I think there is that inertia period that we're going to go through of that delayed period. So I definitely feel that the demand, I think where we'll see the real crunch will probably be the middle of next year, late next year. People will start transacting, the business is replanned. On the technology front, we've been following PropTech, one of our subsidiary sites in the US, and they've just gone, to a very another level. I don't know if you read in the press, Zillow recently announced that they've gone from a very much of an MLS to a direct, almost becoming a Zillow agent, themselves. So you actually can transact at any level, from inception, conveyancing, transfer, title, trustees, everything in one hit. So they've successfully achieved it. They only launched literally during the pandemic, believe it or not, as a test case. So again, we've been sort of monitoring them very, very closely. And again, obviously, we have this world of portals that people rely to as their shop window. I think they are going to get evolved very, very quickly into similar what now Zillow has just managed to achieve. So it's only a matter of time where we see big changes here. This afternoon, we have a virtual viewing in London going on, from Saudi. So I couldn't do that before, Somebody would have to fly there. So, my office will be there. They'll be streaming it live. They'll be looking at it, talking, questions. So I think people who are familiar with and are quite happy to be remote are doing it, where they've not done it before. And even they haven't done it before, to them it's the first time. So let's try it. So once they've tried it, so that's working. So prop tech has definitely changed the way we do business, the efficiencies. And I think the biggest is that we're able to have a pretty agile workforce in the real estate with the prop tech, which basically means that if I employ 200 people in different aspects of my real estate business, I don't really have to have them all in one place. There's certain sectors. My creative, for example, our creative team now sits partly in Cyprus and partly in Philippines. So you've all of a sudden, literally displaced people, but they're connected. So I think technology, definitely. I think we've gone through a revolution in the last 8 months on that front.
Atif, as a developer, I mean, you already mentioned the sort of smart house elements you're bringing into your developments, but does the shift in how you market properties, is this a long-term positive?
It is. Just to mention a couple of my points on prop tech, Joseph, I think it is the most seriously overhyped as a consumer, because I'm a developer, right? And I touch every segment of the prop tech service that can be provided. When I look at the third industrial revolution, the most trailed industry is construction. Okay. We are talking about an industry where we invented solar energy, I think maybe 3 decades ago or so. Till date, I don't have a single window where I can get a company to come in and give me, I would get a PV panel supplier, he would not know how to store the energy. I would have regulatory challenges that I have to throw it back, I have to generate the electricity, throw it back in the grid, and then buy it back from the government. I mean, we're talking about something that is good for the nature, it's more cost effective, it's readily available, and we could not implement till date effectively and more universally solar technology. Prop tech, I have felt, we have to understand, construction is the most multi-layered industry. So we're talking about you're talking about land and infrastructure going into the design of the project and the construction of it, the sale and marketing of it, the legal and conveyance side of it, and then the property management, asset management, and facilities management. I would love to know what has been the contribution of prop tech till date in the industry, except the hype that it has created. Yes, in terms of connecting, that is not prop tech, that is available for any industry. But if you talk about prop tech, let's talk about BIM. Give me one project, one city in this entire world where BIM is universally accepted and implemented. Doesn't exist. In this entire planet, you would not find one single city which has implemented BIM. And we've been talking about BIM for at least a decade and a half. So as a consumer of prop tech, I think it is extremely overhyped. And prop tech generally is linked to how we transact property. That is a portal for buying or selling properties or registering the transaction. But that's not prop tech. If I was looking as a developer, prop tech, I would look at some data which I have to rely on a very, I would say, Stone Age research resource for creating these developments. I would want to see data. Like example, find me one prop tech solution which can give me energy audit data and help me design what is the optimum size of door and windows and the glass elements. What should be the optimum volumetric study we should do in the construction? I don't have. So we're talking about, I've through one of my very close friends, my hobby is to invest in these new startups, and I generally end up losing money more than making money of them. So I was looking at one of the companies which is like a holding company for some great innovative ideas based out of London. I went through the entire portfolio of services that they claim to present through prop tech. Not a single one is matured and can be implemented in the industry. So I am the first consumer of prop tech and I don't get a single solution. I've been struggling to find one single window which can give me a solar technology. I don't have. And PropTech, unfortunately, is more of a listing side to registration. That's where it has got concise. It will be difficult because it's an extremely multi-layered industry. How do you connect the concrete supplier to the steel fabricator, to the shuttering company, and the factories which are manufacturing the doors and the windows, all of them put together to the architect and the design team? It is difficult. It is complex. And I think it's like saying automobile. Can you develop a technology which can connect all the factories, the guy who's manufacturing the wheels and the chassis and the gearbox? And it is difficult, you know. And every company has to rely on their internal research and R&D, and that's what it would, I think, will be. I would be shocked to see any dramatic achievement of PropTech. Otherwise, the most popular one, for example, BIM. Show me one example where it was useful and it gave data for future improvement in construction. I couldn't find one. Smart, on that topic of smart home, generally when we talk about smart home, Joseph, we think about smart switches. So instead of clicking it, you just touch it and it comes on, motion sensors. I think smart home is much more than that. Smart home for me is meeting the requirement of the consumer. It's about creating more space in less square feet. It's about increasing the efficiency of the real estate so that the consumption, we are talking about carbon footprint. Let's start by consuming less concrete at the site. Let's start by consuming less shuttering material. So it starts from there. So I think that makes more sense to me in terms of smart home or smart real estate. We start from the grassroots level. And I think we're proud. We contribute towards developing smart real estate, and we are nowhere close to being perfect. We are improving, we are evolving, and we continuously keep doing R&D to understand real estate more, the changing consumer demands, and see how we can meet them more effectively.
Andrew, I notice you've taken yourself off mute. Do you want to?
I was just about to joke. Atif, you're not exactly going to get an award for champion of PropTech this year, I guess. No, actually, what I wanted to say to Atif, and it's always worrying when me and Atif agree, for the viewers, I suspect, but the way I see PropTech is very similar to FinTech. You know, what was very much startup concepts a few years ago is now about big transformations of businesses by technology and use of data, leveraging brands, and this fundamental question: what are we offering, what are we doing, and bringing technology to bear across all aspects. That's the way FinTech's gone. But, you know, it's about payment systems, it's about big banks deploying huge resources on technological transformation and use of data. That's all it is. And I think the PropTech, calling it PropTech, is an almost misleading inspirational, transformative label to it. So I just want to say I agree with Atif on this one. But can I challenge Atif? Surely technology, what you're seeing now, though, is the advent of a quantum leap in the use of technology and data in how the whole property world is.
I agree.
So I agree with that. I just wanted to sort of, Atif, I totally share your frustration, but like Andrew said, PropTech is probably just an industry word. It's a catchphrase and a brand that's come about. But if you slice it into different areas, and if you took it just from a consumer point of view, what technology or how he can now, or he or she can source an information about a particular area, whether it's the data on the pricing analytics, values, transactions, crime, whatever, just a few touch a button for the data that we've brought in, that information is available. Then it goes into asset management. Look, we have an aviation platform where we manage aircraft. One aircraft, I mean, if you think managing a building is hard, I mean, managing an aircraft is a phenomenal task. I mean, it has like 300 different, data points that you bring into it. But technology, what it's done is it's actually allowed it to combine it, streamline it, to get the information that's useful and people will use. So I think in asset management, PropTech is definitely, there are lots of technologies that come in useful. You're absolutely right. Construction, PropTech in construction arena, whether it's smart homes, whether it's environmentally friendly. I mean, there is still a lot of it yet to actually streamline. What is available is too expensive. Okay, so it's not streamlined. Exactly, you mentioned solar panels. They've been around for 3 decades. Still, why isn't every house doesn't have it? So it is an expensive format, but the actual use of technology and trying to combine different technologies together to use for the actual end user is coming in. But you will see a lot more, for your construction, for example. I mean, I've been talking to people in the US, specifically in construction. There is so much now technology that will come on stream because people have spent last 10 months just on shipping of building materials, right? And you know, the disruption the sites were having, you know, there were people's shipping was being stuck, you know, you're getting steel from China and you got concrete from another part of the world. How the hell, you know, how do you now, all this in blockchain, call it, or technology, or kind of consolidating it, those technologies will be around, they'll come in and you'll find a lot more companies will use them. And the reason is that you've got these millennials who come through the industrial age will actually apply them. And that's a difference. So you that coming.
You know, I agree.
Yeah.
I agree, Steve. You know,
it's very interesting. One thing we haven't touched on is the fundamental change in views of property management companies in the last 18 months.
Yeah.
There are 25 IPOs of property management companies in Hong Kong. All the major Asian groups are stripping out property management. Now, 5 years ago, they'd be stripping them out to sell it as a low cost. We don't want to get involved. Let's get the cost down. Now, as owners of data and a total transformation of what that property management model is and what it can bring. We're seeing it right in front of our eyes at the moment. So there's value seen in property management. Anybody who's got a property management platform out in Asia is you know, getting great offers for them. They're seen in a totally different light to 2 years ago.
Yeah, it's data.
Data.
No, I 100% agree on that. You know that you know, on the property management side, there are more opportunities for the prop tech industry in terms of finding, like as I said, you know, let's do energy audit and find out how we can run these buildings more efficiently. So it's about how we design, how we build, and how we manage these assets, you know. And you know, just this is where I think we kind of get confused, because you see, you know, when we try to implement the tech in the airlines industry, there are 4 manufacturers manufacturing 10 models each. So there are not many variations you will have. Here you're talking about hundreds of countries with hundreds and thousands and millions of developers with their own design concepts and design regulations, which keeps changing from region to region. So it becomes extremely impossible to have a consistent platform. Like something that works in weather condition, for example, does not impact airlines industry because, you know, there's no impact. Now, for example, you know, you do a glass building in London versus a glass building in Dubai, there's an impact, you know. So you can't have a uniform code across the world. And I think, you know, the best we can do is rely on the data, especially from management of these properties. We collect that and try to evolve the construction regionally rather than globally.
Thank you. I mean, we unfortunately are coming towards an end now. The hours run very, very quickly. Perhaps just before we close, we've had some questions coming from the audience, which we tried to draw in, but it would be good to go through each of you and get your view as to, look, if you had a real estate fund, if you were investing today, where do you see the potential for the future? Where would you be putting your money? What sectors and what geographies, or what sector and what geography? But what are your thoughts, Andrew? Should we start with you?
Logistics worldwide, logistics particularly Southeast Asia. And I would shift allocations towards Asia, because the structural economic story, the ability of governments to deliver actually on the COVID response has been quite remarkable. The public finances are strong, and you've got this wealth effect, the urbanization effect, the rising middle class.
Interesting. Atif?
Yeah, I'm a builder, and real estate is in my blood. And I think there's no better commodity than real estate. I'm not just saying because I'm from construction, but I think there's one commodity which always will continue to see increase in demand, increase in need is real estate. If you're investing in real estate in a city which has great infrastructure and a progressive government, you would, over a horizon of 10 years, you would never ever lose money. This is for sure. I mean, go historically, brick and mortar has always been, it's a tangible asset. No one can take it away from you. It's not a share market valuation. You know, it's a tangible asset in your hand, in your possession. And if you bought in a city which has a progressive government with good infrastructure and a good outlook, a city like Dubai or Hong Kong, find me one person who invested in a good real estate in Hong Kong or Dubai who's made a loss. Never. It's never happened. And I think there are some great opportunities in places like Dubai, in real estate industry. It is yet to evolve. We are still kind of in the beginning stages of evolution of real estate industry over here. And I think there are some great opportunities available, especially after the pandemic, where the prices of markets have softened. So you can yield better in terms of real estate investment. Gold will be fluctuating, crude oil will be fluctuating, commodities will be fluctuating, but not I think one of the most consistent performer will be real estate always.
And Steve, from you, well, specifically in real estate, what are your predictions?
I think firstly, if I was looking at immediate decisions, it'd definitely be what Andrew said, really, logistics, warehousing, creating some kind of distribution centers and possibly data centers and etc. They will be your main centers. But it's interesting, actually, what Andrew said about Asia. I think we've all realized how they've handled the current pandemic, what the consumer, the insular population of the countries, and how the population growths are and how they manage. I think probably I would be looking at the similar markets. But I do think there are a lot of opportunities. If I had an opportunity to invest today, I'd definitely look at hospitality real estate because I think they are good values to be had. They're not going to stay empty forever. That's my opinion. And there are going to be opportunities and hospitalities that are right around the world, which are trophy assets, which cost a lot of money to build. So I think, there are opportunities. If I was doing it today, I think that's where I'll be looking at targeting good sort of trophy locations on hospitality buildings. But yeah, that's on the corporate side.
Fantastic. Well, look, I think just leaves me to thank you all for your time, Andrew, Atif, and Asib. It's been a really insightful discussion. We've not managed to cover even an eighth of what we planned to cover, but this is always the case with these discussions. We could go on all afternoon. Thank you to Invest in Dubai as well. Karen, I will hand back to you to close.
Thank you, Joseph.
Yes, thank you very much, Mr. Joseph. Thank you, Mr. Andrew, Mr. Asib, and Mr. Atif for such, it's true, very insightful and very productive. We learned a lot. I learned a lot. Thank you so much to all our participants for watching the Global Real Estate Leaders Debate. And for now, bye to all of you and stay safe. We'll see you in the next session. Take care. Bye.